Well, speaking of safe haven and defensive plays, the dollar hitting a 2-year high today. Take a look at the action in the metals. Gold spiking to a 6-year high. Silver touching levels not seen since 2016 as a global sell-off had investors rushing to safety. Our next guest says this red-hot trade could get even hotter. Let's go off the charts with Todd Gordon of TradingAnalysis.com. Hey, Todd, what are you looking at?
Hey, Melissa. Yeah, let's take a look at the metals here. First, gold. I think it's really important to go back and look at what we've done here in the last 2 decades. I'm sure you guys in the desk can remember. I do trading gold at about $250 an ounce. Well, we've come up a long way. We've been in a little bit of consolidation. The recent run this is it. The one thing I'd note here is we did break above the 2016 high in gold, right about 1380. We're currently trading about 1560. Just from a technical point of view, if you get up through that 1700 from the technicals that we study, the implications are you might finally get that sustained 2 handle in gold. I have GLD, hold it in my portfolio, not so much more in the options, but just in the holding. So I continue to like it in either an up or down stock market. Silver, really interesting. Again, that 2016 peak, we've not yet eclipsed that. That's at about $21 in silver. We're about 19 and change right now. So I do think there is more room to go in silver. Now, keep in mind, silver has got industrial uses as well as precious metal properties. So it could go again. And if somehow the broader markets were to recover in terms of equities. One thing that I find really interesting here, and there's a lot of talk in the precious metals right now, is the gold-silver ratio. And this has a long-standing macro, kind of a long-standing macro indicator. Basically, when gold gets up about 90 times the value of silver, the gold-silver ratio is deemed to be overbought. And when that's happened, you've seen a significant buy signal in silver. So first here, let me draw that 90 level up around there in the gold-silver ratio. First one is back here, early 2000, you peaked out. Nice little bump there in silver. Same thing again here, peaked up around 95. Nice little bump there in silver. Here we go again. Big breakout here. We're just starting to see silver move higher. So again, with that 2016 point at about 21, I feel like they want to go up and get those stops. So I don't have silver, but I'm looking to add on any pullbacks. One market that's got obviously much more industrial use and that is signaling kind of deflationary trends right now is copper. Doesn't look bad technically, but from the models, again, that we follow to get context as to where we are, we're right at that decision point. We really, really need to hold about 2.5 here in copper. If you break down, that's going to be bad. And you guys are talking a lot about FX. Watch that Australian dollar against the U.S. dollar and the yen. They're both pressing lows, and if they do break, along with copper, that is certainly a risk-off kind of deflationary indication. But if it wants to hold, I think we'll be okay, and we can kind of skate that.
Todd, thanks. Good to see you. Todd Gordon, TradingAnalysis.com. I can see while Todd was talking, Dan, you were making the motion to sell silver.
No. Well, I'm just saying that I think when you have a situation like where you had this explosion where people have just woken up to what he's saying, it's a pretty interesting situation. Very clearly, SLV could get back to the 2016 highs at $20. But understand, it just came from 14, a couple months ago. So if you really are expecting copper to break down, the dollar to keep rallying, all those sorts of kind of market mayhem sort of stuff, gold and silver are going to continue to work.
Is it still Dr. Copper?
Sorry?
I mean, is it still? Should we still call it Dr. Copper in its indicator?
Well, the indicator is very important to me right now because it's trading lower with the CRB Rhine. What is that? That's essentially your measure of all these core commodities. These are even some of the basic ones, resins, things that are not even counted by most people. That's cascading lower with yields. You could make an argument that the yields are really the byproduct of that. But what I would say about silver, I agree with Dan. As much as it's underperformed gold, you're at a 90 RSA on a 9-day. It's up 24% in 35 sessions. It's still underperformed. But copper is telling the story. And simply on gold, after 5 years of doing nothing and me being pretty bearish about gold around 1350, saying it was going to fail there, the reason gold is rallying now is because of deflation, not inflation. And that's exactly the reason why I think it can continue to go higher along with silver at some point, but silver's overbought.
Yeah, I think that's a fair argument. I also think, a lot of it has to do with the fact that the gold market's waking up, that central banks are they're impaling themselves, and they're not nearly as all-knowing as the market probably thought they were 10 years or so ago. Central banks, governments continue to buy gold. I mean, that's out there. You can look it up if you want. It's true. And to Tim's point, listen, Freeport-McMoran getting crushed. Cleveland-Cliffs today down 14.5%. Steel stocks, I mean, U.S. Steel was a $42 stock probably on its way to 45. In March of 2018, when these tariffs were announced, were supposed to be so great for steel companies. U.S. Steel now, I think, has an 11 handle. So, again, stocks are telling you something if you just want to pay attention.